David is not with us today. David is potentially going on a hiatus. He is in Hawaii this week, and so I have decided that I will continue doing the How to Make Money Trading Stock show on Friday at 10 o'clock, regardless if David is here or not. And basically what we'll do is we'll just do a real quick market review. And there won't be a lot of ads for anything. Basically we'll do a market review. We'll take a look at some stocks and have everybody basically on their way, hopefully within a half hour to 45 minutes, depending on what stocks you want reviewed. So let's get going. I want to remind everybody that everything we do chat about and talk about is for training purposes only, and traders should always paper trade any new method prior to the risk of any personal capital. I want to thank Kevin. Your email this morning was awesome. I have been looking for that simplified method of putting out the alerts, and that what you sent was excellent. Thank you very much. I love to do presentations and basically can either do them via webinar. We talk about the art of trend trading, active trend trading, or the truth about breakouts and alternative entries. This is a tie-in to the IBD patterns, and it's been given to several IBD groups around the countryside, all the way from the East Coast, West Coast, and to Hawaii. And it's a really eye-opener when you talk about the truth about breakouts and alternative entry, which one is more risky and less risky. So some of you have seen this presentation, so let's get going. The market this week, the S&P and the NASDAQ, and primarily S&P and NASDAQ, we're really flashing signs of being extremely oversold at the beginning of the week and through to about today, and we got some initial indication to trigger some buy orders this morning. The NASDAQ, the market always wins. The NASDAQ took out a swing low, and so that took us out of that trade. But the S&P oversold, looking for a place to bounce. The NASDAQ oversold, looking for a place to bounce. And I think from the action we've seen in the Russell the last couple of days, with its big just run up over the last 2 days and then a partial sell-off today, it's demonstrating the market volatility that can present challenges on its own. We look for levels of support, resistance, and try to trade across those. But outside influences and earnings are basically over. But as we've seen, the market has been very emotional this week. And when I say emotional, like yesterday, the big surge in the Russell was primarily due to the rumor that the Fed will delay raising rates as long as the economy appears to be weak. And we had some mixed news and mixed economic reports in the economy, and so the Russell reacted to that and actually just blew all the way up to its past highs, and then today is getting a little bit of a sell-off. Clearly, what we're looking at is just basically knee-jerk about what the Fed might do. It is totally rumors because we don't know when the Fed is going to raise rates or not. Everybody anticipates it to happen this year, but some people are making a case that why do they have to raise rates at all? And there was a pretty good article that I sent out to the Bay Area Moneymakers about that particular aspect. Last week, pullback, how long? Well, last week what we were seeing is the S&P was accelerating to the downside. It appeared to reach a level of support and was bouncing. And same thing for each one of the other indexes. And last week's knee-jerk was, the jobs report was up, showing that our jobs were up, increase in jobs. And so the rumor last week was the Fed rate increase may be sooner than later, and the market reacted. Here's one of the indicators that Mike Traeger and I used. This is just one of them. To trigger some of our trades, but it's combined with some of the proprietary information that we also look at. This is not the only thing we look at. But earlier this week, we see that the percentage of stocks over the 20-day moving average did hit a low down here around the 30 level. We get a bounce up, and this was yesterday's gap up. And then today we're getting a bit of a sell-off, and this is as of about 9:30 this morning, so we're sitting at about 37.15. I had mentioned previously that to really solidify a bottom, I would really like to see this particular indicator doing more of a formation like this over here. And with that, there will be some whipsaw on potential trades and that kind of stuff to get into one of the index ETFs. However, this consolidation here led to a really big move in the indexes that started about mid-October last year. And you can check the charts on the S&P, the NASDAQ, and the Russell to see how this was a large move. And but anyway, this consolidation help clear a lot of the froth from the market and move things higher. So what might we expect now? Clearly, we'll have to wait till the end of the day to see where this particular indicator closes up, but we may get into a little bit of a congestion where it bounces here between 20, well 25, or even down to 20, and then bounces back up to the 50 level. Its median is right about 52 or so. And as it turns out, this particular, the 30% line, happens to be about one standard deviation away from the mean. And so, as you can see, it doesn't, the action on this indicator does not tend to stay below the one standard deviation or even 1.5 standard deviations too long before it does rebound. And so let's take a look at the particular charts. Make sure I'm getting the right one. There we go. Okay, here we have the chart of the S&P. What's the S&P telling us? Yesterday's candle, this is a morning star type. This is on the daily chart here. Yesterday, the S&P flashed a morning star reversal candlestick pattern, bouncing off the 100-day moving average. Today, it basically would not push through the 100, came back, and typically in these large candles like they're about midway down, there is a support level that is oftentimes unseen, but it can be a good place to plan a trade around, with, of course, the stop being taking out the swing low. In this particular case, we've got basically the true, oops, let me get my pencil here. True strength indicator is oversold. As of yesterday's price action, the momentum actually started to swing up a little bit. But if we look over here on the weekly chart, the S&P may be seeking a slightly, lower low to begin its bounce, but it's, certainly sitting at a level of where it's a support zone. But we could see a fall all the way back down to the, in this case, is the 40-week moving average, which is equivalent to approximately the 200-day moving average. It is starting to get, stochastics are getting, down into the oversold area, and the true strength indicator, as long as the true strength indicator remains above the zero line, and let's say it bounces from there, that's what would be anticipated. If it pierces the zero line on the weekly chart, that would paint that we would potentially have some additional Okay, can everybody see the chart? Yes, okay, thank you. So what we, where was I? Basically, we've got the 40-day moving average working here. Here's an anticipated move off of the zero line if the uptrend is to be maintained. If the uptrend is going to, or we're going to fall deeper into find a stronger level of support, this zero line may be broken, and then we'll look for a pullback to a deeper level. The NASDAQ. Yeah. Okay. The NASDAQ, I basically drew into the NASDAQ and put the Fibonacci retracement. This is from the low back here in the 1st of February to the high just a couple of weeks ago. And as we can see, the pullback so far has been into the fib zone here between the 38.2 and the 61.8 retracement. And we're at a level of support from where we had the breakout previously. And this morning, the NASDAQ did take out the swing low, which was on the NASDAQ. Yesterday's candlestick was a bullish engulfing pattern. Whenever we take out the low of a reversal pattern, basically it voids that pattern. So now the process starts where we wait for the next reversal pattern and or it to establish off a new level of support to get a bounce. Where might it bounce? I mean, if we go down here to, let me get rid of this. Let's say we get right below the 50. So we get right below the 50, this 42.81, and it chooses to bounce there. Where might it go? Well, we would anticipate the bounce to be at least back up to the 43, 46 level, or the moving averages as they're coming down. Remember, these moving averages, the 8 and the 20, they'll react much more quickly to the price action. So right now, we're getting basically a little squeeze. We do have a bearish cross on the 8 and 20, but that's not uncommon. What I was chatting with Mike Traeger last night, and what we may be looking at is we could potentially go into another one of these type of areas where we're getting just this lateral or horizontal consolidation, and the market just needs to tell us where the strong level of support will be. And the Russell. Okay. The Russell. The Russell rebounded on Wednesday off the 50-day moving average, and this was the big emotional upswing right back up into a level of resistance, a resistance zone from the past highs from this year. And then it couldn't push much more past that this morning. And then it reversed and has been selling off. However, it has found support, although we have nothing to say is, hey, it's time to take action at this point because of today's market action. But it is finding support at the 20 and the 8-day moving average as it is bouncing. We'll see where the price action winds up for the day. Because as we see on a weekly chart, we have basically just a spinning top that isn't basically, it's not telling us that, it's necessarily negative or positive. It's just basically a point of indecision. So we'll see where the market goes from here. If we get a close back down below the 20, then the price action on the Russell will most likely, the higher probability of coming back and testing back here at the 1210 or even the 50-day moving average. If the 50-day moving average breaks down here about just below the 1205 level, then that's going to bring in the 1190 or even the 100-day moving average as a potential place to bounce. So any questions on the market, guys? Hi, Tom. Did you have a question? Okay. So let's take a look at, I think that basically wraps up the market review. Okay. Tracy, I'll get to that most gauche. If you guys want to start laying in the chart, laying in what you would like to look at as far as stocks goes, we can do that shortly. So I want to make sure everybody, you can now see the demo, presentation screen where it says to the charts. Yes? Okay, thank you. So let's move. Sometimes, my daughter-in-law sometimes tells me that, sometimes, we eat the bear and sometimes the bear eats us. And Murphy's Law has been very active for me personally this past week, and that not one of the picks that I had from last week actually got filled until this morning with the fills on the. However, we did have had selected AFSI, VIPS, and AFK for potential trades. I know some of the members did get into those and have done very well. And with the current market weakness, I'm keeping my eye on AFSI, VIPS, and Alaska Air because if they hold up well and the market does find the stability of support and starts to rebound, these stocks should rebound either in sync with or actually even before the market starts to rebound. We'll take a look at each one of those charts here shortly. So I want to remind everybody that, Active Trend Trading System, what we try to do is what to trade. We show, candidates to trade each week, when to enter, when to exit, what strategy to use, and what to expect. I thoroughly believe in utilizing stop losses because that is the way we manage risk. And I also like price targets because that's the way we can at least start to manage our potential reward. So that's it for the overall. Again, if you want to contact me directly, you've got my phone number here, my email address. I do respond as quickly as I can to emails. And if anybody wants to know, is typically here in California, I'm up about 5:30 every morning to be watching the market, see what the pre-market's doing and all of that type of thing. So I'll ask you, please don't call at 5:30 in the morning. My wife wouldn't appreciate that. But I try to review and look at the emails so I can respond back if there's an urgent issue. If you want to send me a text, you can also text me at the 808 number. So if you would like us to continue, even if I do this show solo, and like us to continue and with the How to Make Money Trading Stock webinar, please drop me a note so that I know a lot of you have, and I would certainly want to continue this because I think hopefully it brings a value to everyone who's trading. So let me know. So with that, see you next week. Keep growing the egg and trade wisely and trade profitably is how I'll sign that off. So thank you, Tracy. I'll pass it on to Mike. What I may try to do, and some of you have heard Mike chat with me on Wednesday night on the midweek market sanity check, and I may try to talk Mike into jumping on this call with us if David stays on hiatus. What do you guys think about that? Okay, so let's take a real quick look at a couple of those stocks that we were looking at. VIPS, VIPS. We had a nice move from down here about 24.50. It was on our radar, never got filled. It bounced up, had broken out above the 2620 level, but now it's selling off with the market. So let's see what happens. This may wind up being a support area down here about 25 or even down to 24. So, but right now, two nice up days, which led to a nice gain. Secondly is AFSI. Again, AFSI, we had a target to enter here about 54.40 to 54.50. Some of you got filled on this. Made a nice return. Should have already taken some profits off if you were in this trade. And again, it too is selling off with the market, but we'll see where it's going to stabilize. What I would be looking at is, will it obey this level here where it broke out? As long as it maintains above that as we're waiting for the moving averages to catch up, or even if it comes back here down to the 56 level, that might give us a second opportunity to jump in. And Alaska Air. Alaska Air was putting up a very positive pattern earlier in the week. It broke out yesterday from this downtrending line. Nice breakout. Moving averages, the short term and the long term, are moving in the right direction, but it is too also pulling back with the market. So we'll see if this pulls back either to this line or to the moving averages, and pay attention to it there. Right now, it jumped a little bit, became overextended. I know that there's a couple of people who are trading Alaska Air. So did that work for you pretty well? Okay, and the last one to just pay attention to, I highlighted this yesterday. Okay, Richard, awesome. I'm keeping my eye on Habit. It's looking kind of crappy right now, but it's down to the bottom of its moving averages envelope, and it's got long-term support down here at 29.13. If the market turns back around, it had good earnings. I think the earnings were actually positive for the first time. And this one, along with Zoe's Kitchen, was highlighted in a news article saying that, is it the next Chipotle grill? And the restaurants are very, very similar to Chipotle, very kind of like in a low key. We've got one in our local neighborhood. So I'm keeping an eye on this one. This is a pretty, significant. It ran up really nice prior to earnings. Excellent earnings, and then has sold off, and so we'll see if we get some stability down here in the around the 29 level, and if not, then we'll keep it on the list, but it won't be ready to buy. So yes, San, this is recorded, and it'll be posted. If you signed up for it, you will get a email that will will give you the link to the recording. You can always find the recording at Market Tech Talk, my YouTube channel. So let's take a look at some stocks. Okay, let's see. PAYC. Okay. So are you in PAYC currently, Tracy? Yes. Okay. Where did you get in? Well, depending on where you got in, I mean, if you got down here, you can afford to hang on as long as as long as we maintain this 50-day moving average. A couple of days ago, okay, so hopefully down around here. I would be looking for a potential, it's looking like it wants to go. The only thing is this wedge up right here is kind of the volume is falling off on it. That's not, something to be totally alarmed about, because, hey, the market's selling off, and in reality, this is holding up very nicely. And so like I said, depending on where you got in, you can give it some room to breathe. It looks pretty good on a weekly chart. If this winds up where it is currently with this hammer, which is almost like a dragonfly doji type hammer on the weekly chart, you can anticipate a move back up to the 35 level. And what's your targets to get in and get out, or get out? This hammer over here? Yeah, I mean, that would be about there. And as it transposes over to the weekly or daily chart, as you can see, it's just below the 50-day moving average, which would be a good place to plan a stop. If you have some profit in it, you might want to say, hey, if it drops today's low, I want some profit and take out. So you also had BDSI. BDSI is interesting. It made a round trip. It basically came out just prior to earnings, did a wonderful pre-earnings run, had earnings, gapped up, broke out, fake. It basically was a failed breakout, and now has pulled all the way back down to its support at the $21 level. It appears as if it should be ready to turn around. However, it has not given us any candlesticks that say, yeah, I'm going to turn around. This is a new low, and so what we like to see is it to start back up, then come down, put in a higher low, and that gives us an indication that the energy is coming back into the stock. And also pay attention to the momentum here. As you can see, the weekly momentum is still very low with no sloping up, but it is starting to get slightly positive divergence. The weekly momentum is still significantly down. And so I'm not a buyer yet, but I am definitely watching. QLYS. We've looked at this one before. QLS is basically has pulled back to the 50, as you can see right here. And on the weekly chart, it looks like the momentum is trying to fall out of it. It may fall even further to 4073 level, which was approximately the breakout level. But if it holds right here and reverses, I'd be looking for a breakback either above the 8 or drawing a line across here and saying, okay, if it gets back down to the 42.95 level and rebounds, I would take that trade. But my first potential target would be reaching back to the 8-day, which will only be about, what was it, if that worked out, where about a 3 to 4% gain. But just recognize that's where it would probably run into resistance. BA. Boeing. Okay, Boeing's looking toppy right now. As you can see, the true strength indicator index has dropped below the zero line, typically meaning if it doesn't rebound quickly, it's going to go into more of a, here's a terrible pun, more of a tailspin. It has basically broken this swing low. And from a weekly chart, let's see, the stochastics have already turned over, the true strength has turned over. The momentum on the weekly is still looking good, so it may just be pulling back here to the 150 level. It just, or somewhere between the 150 and the 145 level. What would be are you looking to get long in BA, Richard? You also have that, okay, you have that trend line there working, and a minor trend line if you can connect the tops here of these candles. And so that's a potential if it gets back above. One of the things Dr. Elder on Trading for a Living talked about is looking for prices to move above the high of the low day. And that's an excellent technique to utilize. As long as above the high day, gets yourself above the resistance formed by some of the moving averages and that type of thing. And I'm running through these. Excuse me. Pardon me on the sound effects, folks. I'd be looking to play Lululemon short at this particular point. We got that going on. You had a bearish cross. You're getting some low volume push back up into the moving averages, and so that's what I would be looking for. But remember, you've got earnings coming up on 3/26, and so we could be looking at a little bit of a pre-earnings run. So if I wasn't long, well, I hopefully would have gotten out up here, but this gap down, and if this little flag up fails, gets up to the 20 and then rolls over, if this line is broken, which will also basically break the 50-day moving average also, that may be telling us that this particular stock is heading down. And so I always wonder when you get these kind of gap downs and we're this close to the earnings period, whether somebody knows something. We see that a lot with the Chinese stock. Earnings are here. We had a gap down, and just it makes me wonder. LinkedIn. At this particular point, LinkedIn is looking like it's trying to put in a little bit of a topping pattern. It may, if it breaks here through this is the 8-period or 8-week moving average, which approximates the 50. If it breaks here, then it's probably going to go back and retest down here at the 240 level. If the market remains weak, and right now the selling has been kind of controlled in that it's been below average. However, we are breaking this level of support at 260. The top of that level is up at 270 or even 276, and so we could subtract $10 from 260, and where does it put us down to 150? And if we do $16, it's going to put us down just about to that high. So yeah, definitely ready to fill this particular gap here. And we can look at with kind of the theory of gaps tells us that somewhere this whole area here on this gap is considered a support zone. And oftentimes what we'll see, and this is kind of hidden, but oftentimes what we'll see is the price actually can get all the way down to the middle of the zone, and that's where it chooses to bounce. And I find it interesting that the 50-day moving average is right there in the middle of the zone. Facebook. Again, Facebook's just, is primarily just following the market. And one of the things that Mike and I were talking about last night, we're getting several of these stocks and the indexes that are starting to where their moving averages are getting kind of mixed up like the spaghetti we were seeing earlier in the year. And so it looks like we may be moving back into that kind of period. But clearly, Facebook has one support. What do we have here? There we go. Yeah, support down here about the 77 level, and it's got resistance up at the 82 level. If it breaks this swing low, then it's probably going to retest back down into the 77. The 8 days moving down, the 20-day is starting to roll over, and on the weekly chart, it's also, this was a shooting star, and it's a confirmation this week. if this 20 period, which is approximately the 100-day moving average here, if that is busted on the weekly chart, then we're probably looking, Facebook down in the 75 or lower level. Grubhub. Well, Grubhub's holding up very well. It has been on a nice, bounce here where it's gone from the, just down below 34 up to its current level. It is holding up well. What's it? How much? It trades over 1 million shares per week, and I would keep this on the list for potential going. Depending on what the market's going to do. It may get back down here to the 42 level, or if it does, it's going to break the 8, but it may just maintain this line here. And so that would be kind of my 2 marks. The 8-day, is it going to pull all the way to the 20? But those would be my points of interest on Grubhub, and but no big selling going on. Are you already in Grubhub, Aaron? This is interesting. AMBA went on a really great pre-market pre-earnings run, broke out. This is a really good teaching chart, because we get our breakout above this resistance line, basically I think it was just after earnings. We break out, and this does just a very classic pullback to the breakout area, and then the rebound. But look where it's running into resistance. The thing that we want to be measuring on situations like this is how far is it from the breakout back to the resistance. And in this case, it was about 7%. This candle here, which still is in effect, is a shooting star, which is typically a bearish reversal signal. And we'll be keeping our eye on what it's doing with with that bearish reversal signal. Does that help, Aaron? Because if it falls back down and breaks through the 8, then we're probably going to retest back at the breakout area again. Ulta. Ulta had earnings yesterday, after market. We get a gap up, but this looks more like an exhaustion type of gap up. Yeah, it was positive news on earnings, but look what's happened. Is it gapped up all the way to 155, slightly over, and now spent the rest of the day selling off. We've got the gap up here, this window here. So the 148 is a level of support if the 148 is busted. Or we get a trial back up in the midsection of this candle and then it rolls back over. That would be, that could be a negative sign. This volume, you got to remember, is a lot of actual selling. And why is that a selling area? Because it is breaking out to new highs. Yeah, it's breaking out to new highs. It just may be taking profit with the market. If you are in this stock, again, if it breaks down below 148-ish, that may be a time to take a little bit of profits off the table. If you're not in the stock, then you wait for a setup. Habit we talked about. ZLTQ. ZLTQ, it's got, the average volume is okay, but as you can see, here's the concern about ZLTQ. This wedge up here, back up into the moving averages, is done on decreasing volume. That brings, that brings a level of concern to us. It is holding up well with the market as the market has been selling off today. But it's questionable. If it cannot, break back above this, this is a major concern here. And as you can see, the momentum just is starting to, it's not a really nice sharp up move on the momentum and continued going. It could be directly market related, or it could be internal with the stock. Take a look over here on the weeklies. Yeah, we're finding some good support about 30, which we see. And we can draw this. Let me make sure I got a trend line here. Draw that trend line in, which should bring it across there. As you can see, it's right back up to that resistance formed by the trend line. That's on the weekly chart across that way. So from a weekly standpoint, yeah, looks. Price action looks good. However, the internals are still looking weak with it. Okay. And the question is, ZL2Q bought at the 50, which was here. Do you take profit now? I would certainly, I won't necessarily say to take profit, but you certainly want to tighten your stops up. You don't want to, you don't want to let this one turn into a loser for you if it does accelerate back down to the downside with the market. Where you may want to trade this candle here. If it drops below 31.57, go ahead and get out for just a very small loss. Does that make sense, Jorge? NXP semiconductors, it just continues to bounce higher. Right now, it is extended away from both the 20 and the 50 and the 8. It's a nice breakout, strong move on a weak market. How is the market doing? Let me go check real quick to see if the market actually got a reversal as the morning has gone on. No, it hasn't. So when you look at something like that, even talks more to its strength, and actually it's increasing on above average volume. And unfortunately, just was. It was an okay. You could have, bought breaking above this high or breaking back out above the 100. But at the same time, not a real classical type of setup if you're trying to trade a pullback, because that this was a gap here on earnings. Was that earnings? No, it was after earnings, and then we're moving higher. So I'd like to see a little bit more constructive pullback. And so, Franca, are you already in that? Okay. So depending on where you got in, you can just enjoy the ride and utilize, either the 8-day and or the 20-day to gauge your potential, taking some profit. So, Tom, is that WATT? Oh. Okay, I know absolutely nothing about this stock. It trades really low. Yes, okay. Energous Corp. It basically is a low price stock that's trading in a trading zone here between $9 and $12 about. It looks like it's going down to retest the $9 level, and so from a just a purely technical standpoint, You know, you want to get it back down into a level where it's bounced before. This is a inverted hammer at the 50, which is considered a bullish reversal signal. However, on a stock that only trades this amount, you know, this amount of shares, about 200,000 shares per day, I would be more apt to be looking down here where it's going to support. Are you just trading this for, you know, the horizontal range, Tom? Okay, Dan. Okay. Yeah, if you're just doing that, you know, because a lot of times people, you know, and this is something I'll just bring up and just highlight to folks, is some traders will basically identify a stock that is in a trading range, like this one, and it's got a couple of trading ranges. One is from about, you know, about just above 9 up to 1050. You know, that's a 10%. You know, and then basically up to about, you know, 1175 is the other range. Which on a smaller, you know, if you're just buying a few hundred shares, you're certainly not going to want to buy thousands of shares, but if, you know, 400 or 500 shares, based on the bounce and off of support, and they'll trade it right back up to the resistance, and they'll have their order in to sell at resistance. And as you can see, this has gone and done this 1, 2, 3 times, and so 10% gains is not bad. So Dan, welcome. Dan wants to take a look at Southwest Airlines. Okay, Southwest. It's past earnings. It's interesting that that Tom had us look at the other chart, because isn't Southwest is kind of doing the same thing. We got the gap up with earnings, and then basically now we're basically showing a level. It's rolling between support, one level of resistance here, and it's just turning down off that level of resistance, and then another higher level of resistance back from its past high. On a weekly chart, it's just holding up. You know, it's holding up really well considering what the market's doing today. And so I know this is, excuse me just a second. It's remnants of that cold. So basically, yeah, you got a good bounce off the 50, but then it's went right back up into the resistance area, rolled over, and what will it do from here? It appears as if, as you can see, not a lot of momentum has been really in this move here as we've kind of gone this sideways thing. And what we've seen with the momentum indicator is when you get this kind of just sideways, it looks like junk. The stock doesn't tend to go very, you know, much, but then once you get some uniform, you know, aspects starting to pop back in, then you get a nice better pattern on the momentum and a better pattern with the TSI. So you already long, Dan? Okay. So if you're long down here off the 50, you know, you certainly have room to let it cook off a little bit, but at the same time, you're not going to want to let it, you know, whatever gain you have turn into a loss. So, hey, are you you and Kevin in the same location, Dan? So, same area? Oh, okay. So, Okay. Anyway, I pass on a kudos to Kevin for passing on some good information this morning and some formatting corrections, and I really appreciate that. And I know that you ask a really great question also, and I like it when people say, "Hey, keep it simple, keep it simple," and if if it starts to get unsimple, you guys let me know, and so I do appreciate that. Anyway, folks. We have looked at a lot of stocks. I hope that has benefited you. Let's take just one last look at the market, and because the market is always right, to see if it's flashing anything good for us. And so the board at the 2040 is still holding on the S&P. The NASDAQ voided yesterday's bullish candle. And what's interesting, and I'll just throw this out, is while this was a bullish engulfing yesterday, which was voided by today's candle, we still have the true strength indicator in the oversold just about to the 50 level where it tends to bounce. Momentum is looking, like it's just going sideways. But this day is from a technical standpoint, is considered an outside day because its high and its low are larger than yesterday's candle, and that can this kind of indicator is also a bullish indicator. And so, Mike and I, as we chatted last night about how to trade this, we know that we are getting close to a bottom bounce. It's just that the market has got to tell us exactly where that support level actually is, because as we can see, NASDAQ took out the swing low from this day. The Russell, and we'll take one last look at the Russell, and then we'll call it a day. As you can see, the Russell still acting stronger than the the other indices, but as we said, this gap up right here was almost all pure emotions due to the rumors about the Fed, but it did hold the 20 and the 8-day moving average. And so we'll stay positive on that, and we'll look for another entry on the NASDAQ or the index ETF for the NASDAQ. So with that, again, folks, if there's no more questions, I'll get this recording out. Thank you very much. Thanks for your comments. And again, trade wisely, trade profitably. Have a great weekend, everybody.